Hey guys, good afternoon everyone and welcome back. My name is Ivan from SGTech. Thank you so much for joining us for this special webinar. It is so good to see everyone once again as we celebrate the 4 weeks marks of opening the economy in phase 2. So today our session is about digital transformation, now, next and beyond. I'm so thankful to have our organizing partner, Singapore Business Federation and SMU Office of Alumni Relations to be joining us in today's session. Okay, so as always, I want to give a safe harbor statement to our friends. The information provided is based on a best basis and education basis. Please always seek your own independent legal and accounting advice before conducting any business or investment decision. Now, all efforts has been taken to ensure the information is as accurate as possible, but we hope and seek your understanding. If there's any mistake, do feel free to let us know. So once again, good afternoon, everyone. My name is Ivan, Co-opted Counselor with SGTech. My email and my Skype ID is available here. So what is SGTech? Now, SGTech is the trade association representing more than 150 members, all the way from SME to startups to even the big MNC in the tech ecosystem. Now, we decided to put together this lunchtime webinar to really help fellow SME in the market go through and understand what's happening around them, adaptation to the isolation economy, and now the new normal as we try our best to resume business, activity, and a social life. So as always, we're gonna get 3 things. The slides, when available, will be available on the SGTech website about a day after today's session. A recording as well available on the website and our YouTube channel. And last but not least, we're gonna get Q&A session. Now, please help us do something. If it's a Q&A, please help us list your name, your company, and then use the Zoom Q&A function to post us the questions. Now we have some time after this presentation to then take the Q&A, and I will be the moderator for that session as well. So today, very pleased to have EY joining us. I have Chris, a partner with EY, to chat with us about some of the new normals in this new reality. So without further ado, I would like to pass my time over to Chris. Chris, over to you.
Great. Hey, good afternoon, everyone. Thanks, Ivan.
Welcome.
Maybe let me just get started and then I'll hand this over. So when SGTech first came to EY to have a conversation, this was something very relevant to us and for which we are very passionate around. So what we have assembled is really a good set of senior leadership from EY based here in Singapore that will bring you the different perspectives of what we are seeing, especially for the SMEs, but also importantly, as we go through this COVID period with us. So maybe I won't hold on too much details, but I'll hand this across to the first presenter, Vikram.
Hey, Chris, thank you. Thank you, Ivan, for the introduction. Let me just get the ball rolling. Thank you, everybody, for joining the seminar. What we were going to do is take you through our thoughts on what we're seeing in the world and the market. And I will cover the first section where I will take you through my conversations with clients across the world. I run EY's global strategy business. And part of the joy of doing that is that I don't have to get on a plane anymore. I do Zoom calls all day long, but I have the privilege of speaking to board members and CEOs across the world. I'm going to break up buckets. I'm going to just start by talking a little bit about the general macro conditions. I'm not sure if we can have a slide that shows where we're heading, but I wanted to talk a little bit about the general macro conditions that we're walking into, number one. And the second bucket I was going to do is talk about how one comes out of this and what are the 3 or 4 parameters that is relevant for you to think about as you come out of this. In terms of the disease itself, the tragedy is that back in February or March, when we first started recognizing how difficult this was going to be, there was a lot of talk about a V-shaped recovery, etc. And there was a lot of hope for a vaccine or a cure, etc. The truth is that the time for a V-shaped recovery is over. If there had to be one, we should all be back to normal, chugging away. But that's obviously not happening. And the hope for a vaccine is also much delayed. Although there is progress, perhaps more progress on the drugs than on the vaccines, But nonetheless, this is a long haul and it's difficult. Ruchi, could I get the next slide, please? I'm not going to spend a lot of time, I'm not going to spend a lot of time. Ruchi, can we just go back to the first slide? Yeah. I'm not going to spend a lot of time talking about this, but the reality is that in every country that we've seen, the arc of the disease has a direct and strong correlation with the economic impact. What's interesting is that while there have been several experiments in how people have controlled the disease, so Sweden and Japan have done it differently from, let's say, some other parts of Europe or Asia. In truth, the economic impact of most countries has been about the same. So there are very few countries that have really escaped this. The only countries that I can think of where the economic impact has been relatively low have been perhaps Vietnam, maybe Japan to some extent. But for most of us and most of the countries that we operate in, the economic impact is pretty severe. The World Bank estimates that this is probably the first year since they started tracking records in the late 1920s that we will have combined global negative growth. And they've revised the numbers down twice. So this is not a particularly strong, this is not a particularly encouraging message at this stage. I'm not going to go over the details, but the tragedy is that with the second wave coming through in some countries, it makes the possibilities of a recovery, has just dampened the possibilities of a recovery massively. We must be careful for all of us, and I'm sure everybody's taking precautions. But please remember that mask wearing, social distancing, and several other things are super important. So I'm sure you're doing that. But countries that have been a little bit more lax about that, so if you look at the United States, there out of the 50 states, 45 are showing increasing number of cases. This is not a happy situation because not only does it impact economic activity, but more importantly, it impacts consumer sentiment. So many of my clients in the United States, when I speak to them, they will say that they had hoped that by end of June, early part of July, things would be getting back to some cadence of normalcy, but many of them have to put that on hold. California's had to consider lockdowns. Texas is going through a very bad patch. So many big markets are going through a difficult period. In China, where they had managed to control the disease to a large extent, again, we've seen some outbreaks in Beijing and a few other places. So we need to be careful there. India, the curve is just in a sharp incline, so we're worried about that. Let's go next, please. So if we all agree that this is around for some time, and there is no quick fix to this problem, and worst of all, there's a concern about a second wave coming through. We all now are at a point where we acknowledge that this is a global crisis. If you just think back to a few months ago, in January, we'd all heard that this had impacted China, and the initial assessments at most business clients that we were talking to was around supply chain dislocation. But very soon thereafter, this has engulfed the world. And we all recognize this is a global crisis. And we have to get comfortable with the fact that phase 4 is bound to happen, which is there is a global recession. The IMF has laid out statistics that are very discouraging. So it suggests that the global economy will be declined by between 5 and 7% decrease. And any hope of a positive next year is also looking dim. So at best, the initial estimates had been negative 5% for this year and a positive 1 to 2% next year. Now it looks like a negative 7% for this year and maybe even a negative for next year. So we're walking into a clear global recession. The issues that, this is the first bucket of comments, right? The second bucket of comments I wanted to raise was that essentially based on our read of the world, there are three things that tell us whether a company is going to do okay or not. The first is, and Junshi, we can go to the next slide. The first is the countries that we reside in, because country stimuluses have had a massive impact in the fortunes of companies. So number one, the countries we reside in. Number two, the sectors we operate in. And number three, our competitive position and our balance sheet positions within those sectors. I'll cover all three as we go down this path. The government stimulus has been a very large part of the story. In Singapore, obviously, the government has done massive fiscal stimulus, close to about 20-21% of GDP. This is remarkable. It's been done sharp. It's been done well, in my opinion. They've They've crafted it reasonably well, and they have fine-tuned it as we've gone along. This is direct monies into the system, which is probably a better idea than the supply side announcements that have come out from other parts of the world. So the United States has a very similar program, and they've been pretty creative about it. But many other countries have not been able to do that. So if you look at Europe, for instance, they haven't been able to do the fiscal stimulus as well, although we're very hopeful of the $890 billion that Europe is planning to put out into the market. But the other part of the stimulus, which is the monetary stimulus, which is credit markets, bond markets, etc. In America, they've done a fantastic job. In Europe, they've done a fantastic job because they have the instruments and the company balance sheets that marry those instruments. But in our part of the world, since the bond markets are relatively thin and many of our corporates do not have notes in the market, the monetary stimulus has been much harder to pull off. In fact, a much wiser person than me said that about the MAS in Singapore. They said that the offer of a subsidized loan arrangement is saying, I'm doing everything, but it could be doing nothing. So the monetary stimulus has been much shorter in Asia. The one country that has been almost circumspect in its giving out of a stimulus has been China. China has done much less than we'd expected. But we think that more will be coming from China. So as they look through, we will see both fiscal and monetary stimulus coming through. At the current time, it's mostly been policy measures. Next, please. So as I said, the three things that matter, number one, country. So fiscal stimulus, monetary stimulus matter. These scenarios in Singapore are not very encouraging because we're an incredibly open economy, and therefore it doesn't surprise anybody that despite the good efforts of the government on fiscal stimulus, we're still massively impacted. There are several cases being built out, but most likely we think that it's either the swoosh, which is the Nike swoosh. I don't want to indict a good company, but nonetheless, it started looking more like a swoosh, or a W, which is basically we keep getting these second bursts coming through. Neither of them are encouraging, but nonetheless, we're not talking about a recovery till, an economic recovery till maybe sometime well into the next calendar year. Most companies that I speak to in Singapore tell me that they feel that things will be back to normal, not in 2021, but in 2022. It matters, but sectors matter, and we will cover that next. I do want to say that the employment situation is going to be of concern, and we have to think about that as we go along. Next, please. We've been doing a lot of very interesting consumer research, and we're just showing you a snapshot, which is a little unfair because there's a lot of depth and complexity here. But I just wanted to raise 2 points. One is this consumer research that we're doing, we're covering it globally. The two things that have come out of it that I think are interesting are, if you break the consuming classes into 4 categories, what's becoming clear is that the wealthiest categories are basically carrying on, right? So they're basically staying calm and carrying on. So they haven't been affected as much. The next categories down all have been affected in some manner, shape, or form, right? In the world, and I'll get to the China comparison in a moment. But across the world, other than the wealthiest categories, everybody else has been affected. And while the next category down is willing to occasionally splurge, everybody else is basically going back to basics. I'll give you a good example to this. I was talking to the gentleman who leads Heinz, which runs macaroni and cheese. I was talking to them about how their products were playing out. And he said something very interesting. He said in Heinz macaroni and cheese, they have apparently 2 categories of offering. One is the basic offering and one is the premium offering, which has better quality cheese and better quality macaroni apparently. And he said that even in that small premiumization, they've lost that category, right? So everything going back to basic. So staples and basics are doing a lot better than any kind of premiumized outcome. There is a lot of interesting points that come out of that, and we can cover that later if people have questions. The second comment I would say is that there is a massive divergence in customer sentiment and consumer sentiment between China and rest of the world. This has actually taken us by surprise. We had not anticipated this. In my conversations with Chinese market research agencies, they're basically saying that the feedback is Chinese consumers feel that the government is to be trusted and therefore they're going on and getting on with stuff. If you go and look at, I'm sure some of you have seen photographs of domestic flights within China, they seem to be full up, although people are wearing massive protection as they get on, as they board the planes. So there is a divergence that we're seeing in China versus the rest of the world. What's interesting is in Japan, where they've managed to escape the worst of the disease, perhaps, consumer sentiment is down massively. The biggest point I'll make here is that it's an interconnected world. So whether there is a deviation in consumer sentiment today or not, ultimately we'll all converge in some manner, shape or form, because we're all interrelated. It's become very apparent through these last 6 months that both supply chains and economics are deeply correlated across the world. So if you look at Sweden, which tried its level best not to go into lockdown, they have suffered the same economic consequences as neighboring Denmark and Norway. Next. So the first thing to worry about is the country that you're located in. We've talked a little bit about countries, stimulus, and the efforts that governments are doing within the country. The next commentary is around the industry sectors that you're in, and the last commentary will be around your company position. The industry sectors, we have done massive amount of research here, which is both qualitative and quantitative, where we've assessed supply and demand impact. We've talked about supply chain disruptions. We've talked about liquidity risk, which is essentially balance sheet analysis. And then we've talked about shareholder analysis, etc. Based on that, we've been able to break up our industries into categories. The next slide. So these are the sectors that have gone through a very tough period. Before I get into any specifics, let me just say that most economic crises that we have been tracking for the last 35 years, we've seen something called sector rotation, i.e. sectors that were high flying get punctured through a crisis and they come out much weaker. So in the global financial crisis prior to that, the financial services sector was high flying and they came out much worse. In the dot-com bust of the early 2000s, the telecom, media and technology sectors had been doing extremely well. They came out of it much worse. So you expect sector rotation in most economic crises, not this one. This is one of the few economic crises where we believe that sector rotation is much less than expected. So what we're seeing is an acceleration of general trends that is taking people through. So I'll talk about oil and gas and retail first. Oil and gas and retail were both structurally in difficult spots, physical retail that is. And this has come out much worse for them, right? So they have been, this has just hastened their inevitable difficulties perhaps. Aviation and hospitality in my mind are in a remarkably different category because this is really the unknown category in my mind where we have no idea how this plays out. I'm happy to answer further questions about aviation and hospitality later, but in my conversations with very senior airline executives, both in Asia, Europe, and in the United States, they do not see international travel coming back to normal from several years, not just 1 or 2, but maybe even longer, maybe 3 or 4 years. So aviation is much dented. Hospitality is a corollary to that and is going to go through a very difficult period. Hospitality is going through many variations of this. Food delivery and other things are becoming more interesting and relevant. And we can talk about how the profit pools in some of these sectors are changing. But nonetheless, these two are the hardest hit, and this is the unknown category. Oil and gas, retail, etc. in my mind are part of the genuine and structural decline, secular decline of these sectors. The next page talks about some sectors that are coming out stronger. We talked about last mile logistics. We picked out of just a few examples. Last mile logistics is a good example where if anybody is in that sector will know that for the last decade or so, it's essentially been subsidized and been run at losses essentially. But in this current period, we recognize that customers have seen the value and are willing to pay for it. So last mile logistics, all of a sudden we see not only a spurt in demand, but a willingness for customers to pay directly. Anybody who uses online shopping in Singapore will notice that people are willing to put transparency to the cost of last mile delivery, and people are willing to pay for it. So these are good examples where this industry sector might come through stronger. We believe commercial real estate, especially in the logistics space, is going to do very well. So we expect that to come through well. And then finally, as I mentioned, some of the sectors that came through this well are pharmaceuticals, obviously, because this has almost gotten rid of some of the negative aspersions on the sector, and they've redeemed themselves in some manner, shape or form. And FMCG food has done well as well, basically packaged foods, right? So people are not going out for dinner, people are cooking at home, so therefore they need packaged foods. We summarize this, next slide. We summarize this into 4 categories, right? So we believe that there is a category right on top, which is the strong. These are sectors that went into the strong, come out stronger. Consumer tech is a very good example to that. There are some variations to this, and I'll come to it when we talk about specific companies within consumer tech. But in the main, the sector as a whole has come out well. Pharma has come out well. The category right below that is a very large category in my mind, where they recognize that they have to change their business model. They have to change the way they operate. The simplest way for me to frame this, and I'm generalizing for effect, is that most companies in these categories had experimented with digital transformation, experimented with analytics, but not really embraced it in the core way of operating. In my mind, coming out of this crisis, they are not only trying to do things online through e-commerce sales, etc., but they recognize that their fundamental way of operating has to change, and they're willing to take much harder decisions, both in terms of spending more money, allocating more resources, as well as going through difficult conversations about cannibalization, difficult conversations about breaking up of long-term distributor relationships, etc. So the transformed category is a very large category. Many parts of Singapore fall in this bucket. So my sense is that there is a lot of work and work that needs to be done to be able to come out of this stronger. The reshaped categories are basically sectors that were in structural and secular decline. We believe that there's probably overcapacity in the world by between 30 to 60%. And until some of that goes, we will probably not see economic profit coming back to these sectors. Oil and gas, many parts of the oil and gas chain and physical retail probably fall in those spaces. And there's a lot of support that they need. And finally, I've already talked about travel and hospitality, where the future is absolutely unknown. There is no clarity on how this plays out. If you're in those sectors, I would brace for absolutely the worst case. So how does it work for companies? So as I said, country, sector, and then specific company. In our opinion, this is a chance where we are seeing far more what we call company rotation versus sector rotation. So as I said, we do not see much sector rotation coming out of this financial crisis, but we see a lot of company rotation coming through, i.e. there are some companies that came in strong are going to come out stronger. So these are people who are in the right sector and had strong balance sheets. So you can imagine a Netflix or somebody like that was sort of in the right sector and had a strong balance sheet. So that's strong getting stronger. There are some companies that are weak that might come out stronger. So this is companies that had a strong balance sheet and relative to their peers might have been lagging behind over the last several years, but walking into this because they were either passive or they had not stretched their balance sheet. They have a once in a lifetime opportunity to go out and either acquire or beat out their rivals, because their rivals might have been much stronger in many other ways, but probably found themselves in an unlucky situation where they were overstretched and therefore they've fallen off. So this is a once in a lifetime opportunity for some weaker companies to come out stronger. The corollary to this, of course, are strong companies that have fallen off. So these are the fallen angels. I'll pick an example like General Motors might fall there, where over the last 7 years or so, General Motors had actually run a very good business, but their balance sheet was tightly stretched, and their the investment grade bonds have now fallen to junk. So they're financially exposed. This might be a short-term dip. We do not know, but competitors will try to take advantage of these situations. And then there's an inevitable tragedy of companies that were in weak sectors and weak balance sheets where they will come out much worse. We've obviously already seen some in the commodities and the physical retail space where there have been bankruptcies in other parts of the world as well as in Singapore. We expect more of this. If you're in these sectors, cut your losses and exit these businesses if you can. So our general rule of thumb walking into this is that there's an opportunity for companies to come out of this stronger. If you're lucky, great for you. But if you're not, then you have to assess what country you're in, what your sector role is, and what your company role is within that sector, and then make judgment calls about how risk on you should be versus how conservative you should be. And based on that, there are opportunities that you can think about whether you want to climb up or at least secure a position here. Next, please. We'll talk about mega trends, and I'll close at this level where I'll just say that, look, based on hundreds of calls and conversations across the world, the 4 or 5 big topics that we're raising, and I'm laying this out in ascending order of importance, right? Number 1, build resilience. This is, somebody put it very wisely to me. They said, over the last 2 decades, we've been in an efficiency era. Are we walking into a resilience era? This will have costs attached to it. There will be more inventory build up. There's probably more duplication of activities, etc. How will you do that? How much of that can you pass through to your customers? Will it be an impact on your margins? Or all things we need to ask ourselves. The second point is the company rotation point. I've already talked you through this. Some of this might be short-term opportunities. Some of them may be structural. So assess that very closely as you're thinking about your next steps. Profit pools are shifting. We've already seen that happening. I'll just give you a simple argument here that many of you have already started, and I think we mentioned last mile logistics because that's a clear and transparent opportunity there. Already we're seeing deals happening in food delivery and other places like that, where we think a lot of the action is going to migrate. So profit pools are moving closer to the customer touch point. The last 2 points are important and they're somewhat similar, but not the same. The first one is robotics and AI for supply chain and functional improvements are going to become more and more relevant. In Singapore, this actually opens up a bunch of opportunities. Singapore manufacturing has been in decline for the last 2 decades, but the push for robotics and a desire for a more resilient supply chain might allow us to actually build manufacturing through dark factories in this part of the world. Equally, there are going to be opportunities in AI on the functional side. So Singapore, with its high-tech, smart worker base, could actually engage in some opportunities in the AI backroom functions, etc. Already, in my humble opinion, some of the Singapore banks probably have the best chatbots in the world based on some of my discussions. I think we can do more of that for others. Last is the rise of digital. My general comment here is that we expect massive amount of allocations here. I expect a few specific things. One is I expect aggressive alliances to be built up doing ecosystems, number 1. Number 2, I expect there to be acquisitions. There might be some fallen angels in this category, which are underfunded, potentially unlisted digital unicorns. There is an opportunity for traditional businesses to buy them. So on the whole, I expect a lot of activity in this space, but my general push is, and I'm perhaps preaching to the core on an SGTech call, my general push to clients is, if you're in a traditional businesses, you should be considering 30% of your balance sheet and management resources should be allocated towards digital and embrace it in the center of your business, not as a peripheral experiment. I'm going to close out at this stage and I'll hand it back to Chris, but I'll just finish with one last comment that we are leaving our clients with, which is that coming out of this, you need a 2-pillared answer. You need a transform pillar and a transact pillar. Most clients have to do both. They cannot do just one. The transform pillar, as I said, is move to comprehensive change on digital versus the experiments you've been running. Think about the investments that you need to make versus just the efficiency argument. Okay. And on the whole, think about what your cost structures are going to look like coming out. So the transform pillar is a big chunky set of activities. And the second comment is that along with the transfer, you also need to ask yourself, what kind of transactions do you need to participate in? Transactions can be both selling of businesses as well as buying of businesses. We believe that there will be consolidation opportunities and should be done because this is a once in a lifetime opportunity for people to do that, as well as potentially acquisitions into the digital space. There's a lot here that one can think about, but it requires careful balancing between a transform and a transact agenda, but both are going to be central to every company and every client that we meet. Back to you, Chris.
Thank you, Vikram. So maybe let me bring this to the next layer of details. I think firstly, the conversation is where I'd like to go around the next level of operational resiliency. If you go to the next page, so maybe what I'd like to start is, what is operational resiliency? I think when COVID first hit, a lot of our clients would say, oh, we need to activate our business continuity plan. This is a pandemic, and we have a pandemic plan, and we're good. And very, very quickly, they realized that pandemic plans did not equate to operational resiliency. And operational resiliency is the ability for a company to sustain its value creation through its processes. And that's often overlooked. And the thinking is that I have the ability in my disaster or my business continuity plan to actually recover and address a scenario. But what brought about was the next layer of complexities around the people, process, and technologies at an operational level. And they also quickly realized that processes were all linked. And that drove another layer of complexity. There were single points of failure. There were dependencies they were not aware of. And things never worked as what they were. So what we then looked at is, how do we address resiliency? And we structured this into 3 simple components. The now, what do I need to do now to get me out of trouble and to fix what I need to do? The next, what's coming up next? Where will I be? And what do I need to consider? And then to a lot of the earlier points that Vikram brought up, what is actually beyond this? Where do I see myself? And how would I want to land? Now, if I look back into the now and frame it, a lot of the conversations really around the people, the process, and the technologies. And you see in the right-hand side, the table is actually very straightforward. There are key elements around, let's start with the people, the key elements around people. Now, previously, traditional models would be everyone go to the office, to the factory, and we all gather around and get work done. With COVID coming about, work from home quickly became a norm. And then that brought in one level of dynamic changes that people never really considered. What was taught not acceptable was forced upon them, and how did people react? And so that there is a natural evolution in terms of how people will need to adopt towards that. The second component is really about how are you managing your own customers and how are you positioning your brand as you go into this. Now, we all saw very quickly, for those that are working from home, you couldn't go out to buy food. But then quickly you saw that I moved towards Deliveroo and all the other online channels for my food orders and naturally online shopping. We all saw the craze across that. Now, that represents a very clear structure in terms of how you're addressing your brand during a season period. And very quickly, that needs to get established, because if that's not addressed upfront, people will not know that you're able to address and continue that value creation in terms of a scenario like this. Naturally, the most important aspect that got a lot of focus around is short-term access to finance and capital. Now, question then is, where was that needed, and how did I manage all of that? And all these will be all around, the now areas. The second component is really the value creation. Now, for those that actually manage the now quickly, I think very quickly they realized that there's no vaccine for COVID, and neither will there be at this point in time, nor potentially in the short term. At earliest, I think we're looking at probably next year for trials to start, and hopefully by the end of the year. Does that mean that we'll go back to the norm? I think the question is that At what frequency are we going to expect the rebounds coming up again? Singapore is fortunate. We are in the first. How we take leave of all the other countries. We see Hong Kong moving into the second, and there are conversations about it happening elsewhere. So if you think about that, that means the resiliency considerations and scenario plannings are very much longer in nature. It's not a couple of months, but it has at least a 1 to 2 year time frame with no clear end towards that. So what does that mean for you, and how do I continue creating that value to my customer? Now, along the way, you'll find that customers also will change in their priorities. Now, this is very important because you need to then be able to think about what does that mean for me and how do I manage that? And naturally, the beyond will be definitely in the 6 to 12 month range. So that forms a good base. Now, often when we go back to the now and the next, the question comes about is that no two companies are going to be the same. And what's going to be fundamental across this, there will be opportunities to focus on. The question is where and how do you get on top of that, spend the right time and right effort to really identify that. We structured the initial point of view here on the deck just to help guiding. But if you go to the next page, I will really break it down into 5 key areas that you should really focus on. The first one is really workforce management and employee health. I think it's safe to say that in any form of manner, people matter first. Without our people, nothing works. So questions that I need to think about is how do we enable the people to be flexible, responsive, at the same time staying safe and productive. Customer brand protection. I think it's absolutely key that you have a very clear strategy in terms of how do you maintain your brand and more specifically, stay relevant to the industry and your customers during this difficult period. So customer centricity in response is absolutely going to be key because that builds about that lasting relationship, but also sets in play the ability to mitigate the revenue risk from that. The closer you are to the customers, the better insights and the competitive edge across that. Now, naturally, a heavy component of that, as we mentioned, is going to be digitization. So think about what exactly are the opportunities for digitization, and Junshik will run through that quickly. I'll run through that in the next phase, but this is absolutely key. Short-term finance, how do I get access towards that? Strong liquidity, good balance sheet, working capital. Now, all these creates the perception of a business and also manages cash flow. This is important because then it drives a longer-term strategy that you can enable, but also more importantly, increases the ability to drive commercial, but also operational performance. Now, no clear answer towards this, and this is very fluid, and this is clearly recognized by all the government activities that we see here in Singapore. The other element that's caught a lot of our clients by surprise is really supply chain management. I think in this time and age, we all recognize that Singapore on its own is not full end-to-end supply chain. The question is then, what does that look like for you, and how do you actually protect yourself against that? Now, not straightforward answers. Borders closed, factories shut down, or factories are starting up again. Now, how do I rethink about all of this and tie that back into the early areas around the customer centricity and as well as some of the financing aspects? The last component that we see a lot of customers get caught around is, I'll put it, really badly structured legal and contracts. So either they have not really considered some of these scenarios. I won't blame them, no one could really consider that, but really the consequence of this. So then the question is, how do I settle what I need to settle, but more importantly, provide clarity and guidance as you navigate the next steps, especially in the legal environment, to make sure that you are well protected across this. This is very important because at the end of the day, you do not want unintended consequences or disputes arising from that. Now, on the top right-hand side, you will see that we have actually 4 key boxes in there. And I think it's very important that these are really key operational considerations. Crisis management. We see way too many times when COVID first hit, was first centralized with a couple of people, quickly got to a very smaller exco. But then the challenge was that how do you really focus on what's necessary? Short-term liquidity, impacts, countermeasures, all those were absolutely key across that. The second area was really clear communications, and I can't articulate that even more about how important that is. Clarity in terms of how you are managing COVID, comfort to your customers and supply chain is absolutely critical. The third component is think forward. What are the potential risks and what do I need to really drive the structure across that? And the last component is really employee health. I think we touched upon that. And we structured it into a jigsaw because we all recognize that all the different components have interrelationships and interlinkages, and absolutely necessary that all of this gets played in together. The next area I wanted to touch on is really, how can we look at this from a much broader perspective of ZBB? I won't really spend too much time on this because a lot of the conversation is really going to be around where do we see the digital areas of opportunities. But maybe where I would like to touch on is maybe, Junshi, if you go to the next slide, is really where do we want to focus in terms of an action perspective. Here in this slide, we've taken key actions on the left-hand side, and as well cases that we actually have seen to give you the good balance between the two. And for all conversations today, naturally, digitization is going to be front and center across all of these discussions. And I think this is probably where I'll hand it off to Junshik to share his view on what he's seeing out there.
Thank you, Chris. Thanks. Hello, everyone. I'm Junshik. I'm running the digital practice in EY Singapore. So I think the time is actually quite fly fast. So let me a little bit more focus around digital conversation, right? So I understand that the many participants today is a mix of the SME. When I said SME, maybe less than $100 million. That's the Singapore definition, and then also plus minus. So we have a good mix of the small company, big company. But when we address the digital agenda and the COVID agenda, I also think over the last 3 to 4 months, how does it really more matter to the SME, and then how does it last matter to the larger corporation? So I put the 3 things, actions, and then which is all relevant to whether you're small or whether you're big. So number 1 is that this COVID situation, all the points that Vikram and the Chris made, polarization happened. Winner takes all. The weak guys are weaker, and the strong guys actually gain. So if you look at the stock market these days, you see that on tech industry gained most of the popularity, and then all the money is now flowing into the new business and new industry, where the small guys, all the traditional economic guys, getting weaker. So because of that, industry reshaping and transformation, a lot of M&A, you may want to close the business, or you may want to sell the business to split to your business and sell it. So a lot of acquisition and the divestment is happening in the number 1. So you also need to remember. And then number 2, supply chain transformation. I call it. So whenever I ask the SMEs, I look at all the Singapore government, how they want to try to help the SME. There's a lot of it. Digitalization is one big initiative, and then when I read it in more detail, a lot of question is actually coming about to the small operation things, right? But back-end stuff. But digital is really bring a big impact to your productivity. So which means from your back-end office, back-end HR, IT, finance, supply chain management, also from front-end side. So where the digital all embedded. So that's you had enough good tools and a good enough support from the market, even from the government support subsidiary. So but on top of that, supply chain part is most critical, right? So that's where the supply chain transformation, adapting the digital is good. So if you look at the automation in the manufacturing, localization, those are something that you have to consider. The last part, I think, that many SME consider less and then because you have pitch in the dealing with your now and today's issue, liquidity issue, survival issue. However, we say that if you more aggressively adapt to the digital may open the new chapter of your business. Digital can give you more different way of serving the market, different way of making the money, which means digital is the key enabler for the disruption of your business. I understand you may not want to disrupt your business. However, it might be the market, industry, demand, supply chain ask you to change it. On tech industry, after COVID, new normal. Vikram said that 30 to 40% of the customer demand will change. Then today's customer may not come back even after the COVID situation happened, even if we have the new solution. So then you may need to consider changing your business model. So that's the example of Domino Pizza, which is my best example, right? So you may think that Domino is the pizza company, yes? So they try hard to find the best recipe, different types of pizza. However, for the last 10 years, they define themselves, they are not the pizza company anymore. They define themselves as they are the digital company. They invested all the new hiring the new digital scientists, AI, analytics guy, and then make the pizza available. So for the last 10 years, the enterprise value 8x. This is an even better investment than any other the new investment into the pizza business. Since they are made a success in the digital transformation, that's what they did. Okay, so I tried to show that this one. So, but if you have a little bit struggling to understand how do you define the digital transformation? How can I start with the digital? Is it digital like a digital procurement, digital invoicing, digital HR, ERP system is a digital? Please look at the next slide. So this is our digital architecture, your thought process and framework. So always remember, what is your attitude toward the digital? On the left side, this is a more disruption. But on the right side, this is a more productivity. So digital could be your operational productivity. So this is the first thing that you have to make a decision, right? So do you want to change your business model? Do you want to address the new segment, new market? Then you're on the right side of the digital disruption. If you want to employ the digital to improve your productivity operation, that's the productivity. That's all fine. But this decision is a first starting off toward the digital, the right attitude toward the digital, right? And then followed by second layer of the digital is actually bring an impact. If you pick up the productivity, then it becomes you need to come up with a new business model, or customer moving to the digital. So that's why they're expecting the experience should be the digital. So digital customer experience is critical, right? And then your middle office, back office, including supply chain, including your HR, IT, finance, it's operations. So that's the second layer. Third layer of the decision process, thought process, you need to make a decision. Do you have you want to embed your digital capability in-house, or you may want to source the digital capability from outside? What is the right operating model? Would it be organic, inorganic? If it's organic, how you build it? People, IT, process. So that's the digital. So this is the framework. Please remember, always there are three layers the digital process that you need to go through. So and then one thing that actually I really want, I think like what I said, today I'm not gonna too much talk about the digital operations side. So if I really want to help you, because since you're the relatively small SME company, you may miss the large mega trend in your industry where they're moving to. It doesn't matter whether it's a finance sector, manufacturing sector, retail sector, it doesn't really matter. It is quite critical for you to understand where's the money going to, and then what happened to your industry, and then how does digital matter to you. So one thing that I really want to share with you, concept of the digital ecosystem. So you hear about the old economy, and then people talk about new economy. So big difference between old economy and new economy is old economy is largely driven by the supply side. capital and HR, human being. And then if you have the technology R&D capability, you can be the winner. But in the new economy, nobody really said that they dominated the whole, the new economy market. New economy always require ecosystem. So, and then because new economy largely driven by the platform business, everything convert into the platform business. So if you look at for the last 13 unicorns in this region, one common factors. Number one, of course, I mean, all of them are losing their money. That's the common factor among the unicorns. Okay, let's not consider that one. So all the unicorns actually having the platform business, and then they have the partnership, they have the joint venture, they actually design the ecosystem, and then they playing the role of the orchestrator. And then they invited all the friends and brothers and sisters to be a part of the ecosystem, right? From the SME perspective, I don't ask you, you need to become orchestrator. However, you can even also figure it out. What's the role and responsibility within that digital ecosystem and platform, right? You don't have to be orchestrator. However, you could be a connector, you could be enabler within the ecosystem. Then you define yourself, you can survive under the new economy by having the right understanding on the digital. So another tips, okay, I want to more focus on the digital operation. Disruption is not something that I can control. I don't want to do it. I don't want to cannibalize on my business. I want to more focus on the digital operation and productivity enhancement to survive. Then where do you start? The easy way for you to think is a concept of the digital twin. So digital twin is today, 100% your offline business. You think about how to migrate your whole offline business to the online business. So building the exactly same twins, identical presence asset into the online cyberspace, that's called the digital twin. So throughout this exercise, you can really define it. Which part is the core for the digital, right? But thanks to the digital twin, you will start to learn that, wow, you have the new capability, such as a lot of it happening in your offline is all analog. So you don't have the data. But once you copy and paste into the digital, you start to gather all the data, and then your core competency actually shifting from your offline physical asset to the data. So we see the many cases, right? So moving to the digital will give you a lot of a new edge and a new comparative advantage. So digital twin would be the good concept. So we actually, EY, we are quite excited about this case. So they had a similar SME company, petrochemical distributor in Indonesia, right? So they are the largest good supplier, very old economy way for the last 30 years. And then they came to us, hey, they have about the digital, all the oil and gas market is volatile. And then they have the one question, hey, how does the digital matter to us? And then we analyze the business model, we look at it, and then in the cyberspace, we find that it's a less competitive. There's no one actually, selling the petrochemical, product they are selling. So we bring the concept of the digital twins. However, during the then migration, it took 1 year actually, but it took 1 year. It's not because of the technical, digital implementation stage. It took a long time. It could have lasted 8 months. There are enough commodity solutions that you can identify. More important thing is how can we actually spend more time on the business model in the digital, how it brings up a complementary synergy between offline and online. So they actually went through the journey, and early this year it was launched, and then it becomes a very successful in the digital. So now they actually start to learn that, hey, digital business is supposed to be omni-channel, but the concept is they found that they are migrating from the offline to the online. And then when you move to the online, the total addressable market is much bigger because they don't have to stick to the small, they are current key customer in the product. They are facing the unlimited opportunity in terms of customer, in terms of product. So this is a great example of digital twins, and then more adapting the disruption rather than productivity enhancement. Okay, so I understand. I mean, it's a matter of time. I see a lot of questions. So let me hand over to the Desmond for him to finish the wrap up of today's presentation. Thank you. Hand over to the Desmond.
Thanks, Zhongxing. And what I'll do is I'll do a quick wrap up before we head over to the Q&A. And as EY's Asia Pacific Family Enterprise Leader, I've been fortunate working together with my colleagues closely with private companies and business owners, both in good and tough times. And I think it's an understatement to say now it's a difficult period, but maybe I think let's also focus on the opportunities and opportunities for businesses that can pivot and can adapt. Because they will not only survive and grow, as you have heard from my colleagues, and this could be through various ways in terms of, say, business model refresh or new businesses. But what we are seeing central to a lot of the conversations is about digitalization. And digital technologies will be one of the few or the most powerful options for recovery. And if we could just leave with you 5 transform actions as you wrap up. Number 1, rethink your infrastructure to support your distributed workforce today. Accelerate the cloud adoption to support ecosystem approach to business operations. Double down on cybersecurity because threats exist and they actually escalate in this environment. Use this crisis to rethink your digital strategy. And the 5th, rebalance your IT operations to support new commerce models. So my parting words, stay positive, be resilient, make the most of these opportunities, and keep in mind that EY is here to support you. Back to you, Chris and Zhongxing.
Okay, thank you guys. Let me take over the screen first. Here we go. Thanks so much to our friends from EY today to share with us the items itself. It's been such a good sharing. Hold on for a while. Now, due to time constraint, we're not going to take the Q&A in this chat session itself. For those of our friends who are tuning in for the Q&A, I think Chris and his team will be answering it on the chat app. So if you guys have questions, please type in the Q&A chat, and Chris, Yongson, Desmond, and of course Vikram will answer them for you. So on behalf of SGTech, thank you EY for sharing with us today. It's great to know as a fellow technologist that I will still have a job after all of this is over. So due to time, I'm now going to pass over my time to the next part. We have the solution toolbox coming up. So Songxia, over to you, but Chris and all, thank you so much. And please help us answer the question in the Q&A part. Songxia, over to you.
All right, thanks.